Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial report of SPAR Group, and let me tell you, it's a bit of a roller coaster. We're about to unpack restatements, going private deals, and some surprising accounting choices. So buckle up, because this one's a wild ride. But first, if you enjoy getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. SPAR Group had to restate some of their previous financial statements because they made a mistake in how they calculated the gain from selling their Brazilian joint venture. Basically, they didn't account for a payment coming from the joint venture properly. This meant they had to go back and fix the numbers for a few quarters in 2024, which isn't exactly a sign of smooth sailing. Now, with all these accounting changes, you might wonder if the executives had to pay back any bonuses. Fortunately for them, the company's compensation recovery policy didn't require clawing back any pay because no one's bonuses were based on the misreported numbers. Adding to the fun, SPAR Group found some significant problems, also known as material weaknesses, in their internal financial controls. This means they weren't completely confident in the accuracy of their financial reporting. They're working to fix these issues, but it's definitely something to keep an eye on. SPAR Group is trying to go private with Highwire Capital, and this potential deal comes with its own set of risks. If the deal doesn't close on time or at all, it could negatively impact SPAR's stock price and business. Plus, they've already spent a lot of money planning and negotiating the merger, which they'll have to eat if the deal falls through. The company warns that they operate in markets that are sensitive to economic ups and downs. If people stop shopping, retailers suffer, and SPAR Group feels the pinch. They also highlight risks from governments changing labour laws or increasing wages, which could drive up costs for them and their clients. The company's stock is also subject to volatility and general market risk. The value of SPAR Group common stock can change a lot because there is a small number of publicly available shares and the founders still own a lot of the company, so they can greatly influence the stock's direction. SPAR Group knows about cybersecurity, so they're working to protect themselves from cyber attacks. They have a team that monitors risks, does vulnerability scans, and trains employees. Luckily, they didn't have any major cyber incidents this past year. Let's dive into some numbers. In 2024, net revenues were $196.8 million, down from $262.7 million the previous year. That's a drop of about 25%. Think of it as losing 1 in 4 customers. This decrease was mainly because they sold off their international joint ventures. The company provided some highlights around their performance using a metric that they defined called Adjusted EBITDA. This is a non-standard measure and is used by the company to show a more positive trend of their performance, highlighting trend and excluding items that we do not believe are indicative of our ongoing operating performance. Or looking at it, we see that consolidated EBITDA came in at 225/11 woven EBITDA metric, adjusted for their special one-time things. Tells a better story for 9 million, tells a better story for them as coming in at $6 special one-time things, tells a better story for 9 as coming in at 16 items that we do not believe are indicative of our ongoing operating performance. Looking at it, we see that DAR metric, adjusted for their special one-time things, tells a better story for them as coming in at $6 special one-time things, tells a better story for them as coming in at $6 alone to 9 million. Selling, general and administrative expenses, which are basically the costs of running the company, were also down at $37, 37.5% of net revenue if they ignored strategic alternatives, costs to execute sale of joint ventures, and transaction costs associated with the proposed merger with Highwire Capital, which management sees as non-recurring in nature. The company included an interesting point here about earnings per share by using a non-GAAP, not standard accounting measure that shows true gains after the sale of their Brazil joint venture. They added substantial economic value. On a GAAP, the substantial economic value. On a GAAP basis, the earnings were actually negative loss of 0.19 cents per share. The report includes restated financials, which is generally not good as it means you have to go back and correct your previous reporting. In June, the net revenue was just over 57 million, now corrected, and September's 37.7 million revenue is now final too. As significant stockholders, the majority stockholders can have an impact on the nomination and election of directors and the passage of other shareholder meeting proposals, which means that a small group of people are running this company. Cybersecurity holds a significant role within their risk management procedures and remains a focal point for the board and management. The audit committee members engage in comprehensive discussions with management regarding these risks. This sounds great, but also very much boilerplate. Their list of subsidiaries after closing and selling off a lot of businesses only includes SPAR Marketing Force Inc., SPAR Assembly and Installation Inc., and Resource Plus of North Florida Inc., and the Canada Wing. Form 10K summary is empty, since this section doesn't exist in the document. 2. Now, looking at these results and announcements broadly, SPAR Group has definitely been undergoing a major transformation. The focus seems to be on simplification by selling off their international units and focusing on the US. The management does a good job by highlighting the good parts of a bad situation. Their adjusted numbers are definitely more positive than just GAAP. As of right now, the going private deal seems to be their biggest risk and opportunity. If it goes through, this doesn't matter. If it doesn't, they'll have to navigate their future with a lot less business cash and an expensive failed transaction. What is Warren Buffett's style analysis for this company? This is a high volatility scenario. Not many people own the stock and not much happens, so it is easy for it to greatly change in price in case of good or bad news. It's also likely that management knows more than you do, as they are selling off big areas of business, such as international areas of operations, and trying to focus only on the profitable parts. Finally, it seems that the true earnings are not what GAAP tells you, and you would have to take management's word for it to believe that they are doing great. Warren Buffett doesn't like volatility, prefer long-term growth, dislikes unknowns, and hates PR talk. If you followed him, you wouldn't be buying this one. Alright, that's our breakdown of SPAR Group's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.